Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll do now one question of profit reconciliation statement where financial book as well as cost book shows profit. Let us read the question. The net profit of company for the year ended 31st March 2014 was rupees 56,600. Shown by financial books, the cost account disclosed the profit of rupees 59,650 for the same period. On an examination of both set of accounts, the following facts were discovered. Goodwill written off in financial account 1,500. It is not recorded in cost book. Transfer fees received during the year 200. This is income which is recorded only in financial book. Transfer fees means here share transfer fees received by the company. When shares are transferred from existing shareholder to the new shareholder, company takes transfer fees, which is an income for the company, which is recorded in financial book, but it is not recorded in cost book. Depreciation charge in financial account 750. Depreciation recovered in cost statement rupees 1,000. Opening stock on 1st April 13 as per financial record 13,000. As per cost statement it is 12,000. Closing stock as per financial record 14,000. Closing stock as per cost statement 15,000. Prepare reconciliation statement reconciling the profit as shown by financial cost book, taking financial profit as starting point, and secondly costing profit as starting point. Let us do the working notes. Profit as per financial book is 56,600. Let us first start with profit as per financial book. So our first column is financial book and second column is cost book. Goodwill written off 1,500. This is recorded only in financial book. Transfer fees received during the year 200. It is recorded only in financial book. Depreciation in financial book 750. In cost book rupees 1,000. Opening stock in financial book 13,000. In cost book it is 12,000. Closing stock in financial book 14,000. In cost book 15,000. We have recorded items. Now from first amount column, we will deduct amounts in second column. 1,500 minus 0, it will be plus 1,500. It means in profit reconciliation statement, we are required to add this amount. Depreciation 750 minus 1,000 minus 250. In profit reconciliation statement, we are required to deduct this amount. Opening stock 13,000, 12,000. Difference 1,000. We are required to add this amount in profit reconciliation statement. Transfer fees 200. It will be plus 200, but it is an income. So here we are required to reverse the sign. We'll take minus. Closing stock 14,000 minus 15,000. It is minus 1,000. We'll take plus 1,000. Starting point will be profit as per financial book 56,600. To this we are required to add goodwill written off 1,500. Opening stock 1,000. Closing stock 1,000. We have to deduct depreciation 250. Transfer fees 200. We have added 3,500 to 56,600. It comes to 60,100. Less 450. We got profit as per cost book 59,650. Profit as per cost book 59,650. So we have perfectly prepared profit reconciliation statement by taking financial profit as a starting point. As per the question, we are also required to prepare profit reconciliation statement by taking costing profit as a starting point. If we are to prepare profit reconciliation statement starting with cost book profit, our first amount column will be cost book, second amount column will be financial book. We have working note sheet, only there will be change in columns. Goodwill written off in financial column 1,500. Depreciation cost book 1,000, financial book 750. Opening stock cost book 12,000, financial book 13,000. Income 200. Transfer fees in financial column 200. Closing stock 14,000, 15,000. In cost book column 15,000, financial column 14,000. From first amount column we'll deduct figures of second amount column. 0 minus 1,500 minus 1,500. 1,000 minus 750 plus 250. 12,000 minus 13,000 minus 1,000. In income 0 minus 200 minus 200, but we'll have to take plus. We have to take reverse sign. Closing stock 15,000 minus 14,000 plus 1,000, but we have to take minus. We have to start with profit as per cost book 59,650. Goodwill written off minus 1,500. Depreciation plus 250. Opening stock minus 1000. Transfer fees plus 200. Closing stock minus 1000. Profit as per financial book 56,600. Here in question they have given profit as per financial book 56,600, that is matching over here. Thus we have prepared profit reconciliation statement taking first financial profit as starting point, then costing profit as a starting point. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.